Good evening. I hope you all had a great day, which might have been a hard task after the horrendous performance from the market today. The S&P ended down a dismal 5.89%, while the Dow posted an even worse day, as it was down 6.9%. Finally, the NASDAQ ended down 5.27%. Stocks were battered on fears of a second surge in coronavirus cases, which is still considered a part of the first wave. These fears come after there has been a spike in cases and hospitalizations in California, Arizona, Florida, and Texas, after the previously mentioned states began lifting lockdown measures and reopening their economies. The virus has now infected more than 7.3 million people worldwide, with the US accounting for more than 2 million. Global markets had rallied in recent weeks as countries began easing lockdown measures and returning to economic activity. But the prospect of a much longer recovery period and increasing concern over the second wave of COVID-19 cases seems to be tampering previous optimism. Quote, "After the initial reopening bounce, the path to full employment will be a lot more challenging. In addition, risks related to subsequent waves of infection, the upcoming elections, weak global recovery, and trade tensions would likely complicate the recovery path," said Fidelity International head of global macro, Stupnytska. Responding to fears of the second wave of coronavirus cases, Treasury Secretary Mnuchin said that shutting down the economy for a second time to combat the spread of COVID-19 isn't a viable option and could cause even more headaches for Americans. He said, quote, "We can't shut down the economy again. I think we've learned that if you shut down the economy, you're going to create more damage." He continued, "And not just economic damage, but there are other areas, and we've talked about this, medical problems and everything else that get put on hold." Mnuchin also said he's prepared to return to Congress to request additional fiscal spending to help juice the economy if needed. Quote, "We have the Fed program. We have Main Street, which is going to be up now and running. And we're prepared to go back to Congress for more money to support the American worker. So we're going to get everyone back to work. That's my number one job, working with the president, and we're going to do that." Before the market opened, it was announced that 1.54 million Americans claimed unemployment last week. This beat the expectations of claims of 1.6 million. This is another decline in weekly claimed unemployment, as it fell by 355,000 compared to last week. Though the total decelerated for the 10th straight week, it still represents a stunningly sharp amount of workers that have been brought to the unemployment line over the past 3 months. Continuing claims, which is a better gauge of current unemployment, fell by 339,000 people last week, but remains at the historically high 20.9 million, which is only 4 million less than the peak coronavirus total. The report comes a week after the Bureau of Labor Statistics said that non-farm payrolls increased by 2.5 million in May, though reporting errors have cast some doubt about how aggressive the recovery has been so far. Total U.S. debt increased to $55.9 trillion, increasing by 3.2% compared to the previous quarter. The biggest debt gain came on the business side, rising 18.8%, while federal government debt also jumped 14.3%. Total federal debt recently passed $26 trillion. Household debt rose 3.9%, due in large part to an increase on the mortgage side of 3.2%. Consumer debt also rose, but by a small 1.6%. This sector performance graph shows the immense brutality did not spare anyone today. Oil and gas had a horrendous day, being down more than 9.2% on average, while basic materials was not far behind. The best day came from telecommunications and utilities, but these two sectors were still down more than 4.6% on average. Our U.S. equities barometer showed the immense losses spread across everyone today. Small cap value had the worst day, being down an immense 8.49% on average. The best day came from mid-cap growth, which had a laughable performance of negative 5.4. The largest gainer in the S&P 500 happened to be the only positive stock in the entire S&P 500 today. This was Kroger, which was up 0.4% during regular trading hours. Kroger remained positive today due to BMO Capital lifting earnings estimates ahead of the grocer's fiscal first quarter financial report next week. The firm's price target is currently $34, and they maintain their position on Kroger as a market perform, due to the uncertainty surrounding the duration of favorable grocery demand trends and an unchanged long-term thesis. The other best day came from Cabot Oil and Gas, which fell 0.4%. I never thought that the second best performer would have a negative day. There was no reason why Cabot did not fall drastically alongside all of its oil and gas competitors. The largest loss came from Norwegian Cruise Lines, who continues to find itself on this program, and recently, not for good reasons. Today, Norwegian was down a frightening 16.46% as investors flee retail and other stocks that would benefit from the economy reopening, which also includes cruises. The second biggest loser today was infamous Boeing Corp, which was down a similar 16.42%. This move comes after industrials experienced a large sell-off, and there was news stating that their 737 MAX planes production has stopped, even after they started production up again just 2 weeks ago. Getting into earnings, we start off with Adobe, ticker symbol ADBE, which is a popular multinational computer software company. Their earnings were overall positive as they beat EPS estimates by 13 cents, coming in with non-GAAP EPS of $2.45 per share. Revenue did miss earnings by a minuscule $30 million, as Adobe had revenue of $3.13 billion, which represented revenue growth of 14.2% year over year. Due to these seemingly positive earnings, shares of Adobe are currently up 3.7% during after-hours trading. Next up, we have Lululemon Athletica, ticker symbol Lulu, which is an increasingly popular athletic clothing retailer, but also has branched out into more broad women's and men's fashion. Lulu's earnings were dim, as they missed on both EPS and revenue estimates. EPS missed by 4 cents, as Lulu recorded a positive GAAP EPS of 22 cents. Revenue was worse, as they missed estimates by $44.02 million, due to them recording revenue of $651.96 million for the first quarter. This represented a decline in revenue of 16.7% on a year-over-year basis. There were some positive notes, though. Currently, Lulu has 295 stores open, and e-commerce revenue grew 68% year-over-year, and even represented 54% of sales. Regardless, they did experience a decline in operating income, as they had an operating income of $32.8 million this year, versus $128.8 million a year ago. Shares took a dive as Lulu lost 4.68% during regular hours trading, and currently an additional 6.35% loss during after hours. Lastly, we have Dave & Buster's Entertainment, ticker symbol PLAY, which is a popular restaurant that focuses on food, sports, and adult entertainment. Each Dave & Buster's has a full-service restaurant and video game arcade, along with many TVs broadcasting all of the current sporting events. Dave & Buster's earnings were not expected to be good, and those expectations were correct. EPS missed by 54 cents, as they reported a loss of $1.37 in GAAP EPS for the fiscal first quarter. Revenue only missed estimates by $8 million, as they reported revenue of $159.8 million. Although this did represent a decline in revenue of 56% on a year-over-year basis, but that was assumed to be the case. Dave & Buster's got demolished during regular trading hours due to retail and other stocks that were poised to benefit from the economy reopening taking the largest hits. Regardless, Dave & Buster's are currently down an additional 4% after hours, as the sell-off continues. That is all I have for today. Hopefully, we can have a better day tomorrow. I wish you all the best of luck. As always, I'll see you again tomorrow.